whatever that goal is, it's going to be uncomfortable. It's going to be hard. You're not going to know everything. It's going to be hard to start. It's going to be hard to be consistent. And you have to do it either way. That is the only way that you make progress. All right, guys. Hey, so Michael Manaskayan here. I'm going to talk to you about literally step by step how I've been able to buy and hold over $20 million of real estate in the last 5 years. Literally, my first property I ever purchased was in May of 2020. And then today, 5 years later, I own over $20 million of real estate. The vast majority of it bought using other people's money. And I'm going to talk through that entire journey with you guys. I feel like I failed yesterday. My goal yesterday was to explain my financial freedom journey. And I think I kind of did that. I glossed over my real estate investing journey. And that was the biggest thing there. I talked a lot about motivation and what got me started. So I talked about my financial freedom journey in essence and why and what drove me so much. But what I did not do, I don't feel like I gave you guys enough for my real estate investing journey. And, honestly, this is all new for me. I mean, some people see me talking live and doing these things and they think, oh, cool, you got some lights. You know what you're doing. I don't. I'm just figuring this stuff out. I'm just talking to you guys. I'm just trying to help provide value as much as I can to people. And the thing is that I made a kind of a goal for myself. I'm turning 31 in June. My goal was, hey, let's start helping more people, even more people than I've been helping. And I think one of the best ways I can do that is by showing who I am and literally helping you guys on your journey by sharing the things that most are not willing to, who have already done this journey or actively doing it. So I really want to give you guys that transparency and show as much as I can to help you guys out. This is not like a comfortable thing for me to do, to go live. I mean, just think about yourself, right? Wherever you're at in your life, is it comfortable to ever start a new habit? No. And my goal was, okay, June is my 31st birthday month, right? I'm going to go live every single day for 30, 31 days, however many days are in June. I got to count my knuckles. I don't know. And then I told myself, screw that. Why wait until June? Just start today. And that's what I did a couple of days ago. And that's how I feel like a lot of people should be thinking about some of their goals. There's never a perfect time or a right time or some magical month or some magical anything. It's just start as soon as is reasonably possible for you, as soon as it's possible for you to do so. Don't put an arbitrary start date at some point in the future just for the heck of it. And understand if you're doing something new, especially with a goal that you have in mind, something you actually do care about. For me, helping other people, for a lot of you guys, working towards your financial freedom or building your active income or whatever your focus is. You guys are primarily watching me because of real estate. So whatever that goal is, it's going to be uncomfortable. It's going to be hard. You're not going to know everything. It's going to be hard to start. It's going to be hard to be consistent. And you have to do it either way. That is the only way that you make progress. I tell people my real estate investing journey, my success from real estate has not come from 3 16-hour work days, right? It's not like I worked really hard for a few days and 5 years later on all this real estate. It has come from 30 minutes to 4 hours a day, several days a week for the last 5 years, just building another habit, right? And as you go along your journey, you get more comfortable, you build more experience, you build more knowledge, you build more relationships, your skills develop, your resources develop, things start getting easier and better over time, and that starts compounding. So let's talk about my financial freedom journey. Right? So I mentioned I joined the military in 2018. And at that time, I could have spent my free time when we weren't training and working out. I could have spent that free time, doing whatever else I wanted to. Most people playing video games, drinking, whatever you want to do. Whatever you want to do, you could have done. For me, I was enjoying some nature time. I was getting some extra working out in. I was eating more so I could gain some more weight. I was really small, skinny coming out of college. And a big thing was I was so committed to financial freedom. I took that extra time to learn about real estate investing. I watched podcasts. A lot of it was bigger pockets at the time. So podcasts, books, lots of great books, pretty much tactical books, right? It wasn't like mindset and all that. Those would have been good, but it was primarily the tactical book, step by step, right? How to buy my first deal, how to be a self-managing landlord, how to buy deals using little to none of your own money, like a lot of Brandon Turner books and David Green books, and just a lot of the kind of staple bigger pocket books is what I was reading. Gary Keller has I don't know the title, but he's got a phenomenal book. It's like one of the best. It's like a freaking encyclopedia. It's dense. I remember going to the gym and reading that thing or listening to that or reading it on my phone as a PDF and sometimes listening to it. I was just learning and consuming. And then I was taking action at the same time, which was for me, what was in my comfort zone was let's find deals, develop a buy box. These are the types of deals that I want to buy. And let me start analyzing these deals. So then when I got stationed up in Fairbanks, Alaska, so it was Oklahoma, then San Antonio, and then Alaska, in the summer of 2019. As I mentioned, we started with renting a duplex, a 2-unit property. We lived on one side and rented out the other. It was like crystal clear what my buy box is going to be. I've learned about various strategies. One of the easiest ways to get into real estate, some of the best, lowest interest rates, lowest down payment options, especially for someone who is serving, was to house hack a property, which simply means you either buy a single family home and rent out the rooms, or you buy a 2 to 4 unit property and you rent out the other units. So that's exactly what I did. I said, we're already living in a property where it's already 2 units. We're sharing this wall anyway. Why can't I just be the owner of this thing if a deal makes sense? So I spent the next roughly 1 year, like I spent 6 months learning hardcore, 6 to 8 months learning hardcore. Then I spent roughly the next year looking at deals, like, okay, every single 2 to 4 unit I was going to analyze. And only until the end of 2019, when I went into a room of other real estate investors, the first real estate investment group I was part of, the first time I really connected in real life with people who owned real estate as an investment, outside of like the one influential people who own like a big apartment complex, but that was so far over my head. It was at this local real estate investment group. And I had the opportunity to connect, let's say community, just anything, other real estate investors. They were motivational because they were proof to me. Obviously, this thing is real. It's not just these books. It's not just books. It's not just numbers on a spreadsheet. These are actual people doing the thing. As I mentioned yesterday, it was also a little bit frustrating for me in a sense, because I was in a sense jealous and frustrated that I spent all this time analyzing these deals, the exact same deals a lot of them were analyzing. But the difference was they were making offers and buying the deals. Honestly, I'm not going to lie to you. That was a frustrating moment for me because I realized, damn, what if I just did that? It's not like they were analyzing better than me or found properties I didn't know about or whatever. They were doing the thing, which was actually making offers to buy a property. And for me, I was just stuck with numbers on a spreadsheet. So it was frustrating. I was not frustrated at any of them. I was inspired by them. I was frustrated at myself for not actually taking the action that I needed to and falling short. And I know a lot of you guys are probably going through that, where you feel like you're falling short of actually doing the thing that will move the needle for you. And I broke it down yesterday. Financial freedom through real estate is very straightforward. You want to be financially free through real estate. That's going to come from cash flow. Cash flow comes from owning assets. To own an asset, you need to put it under contract and get funding for it. And to find these properties, you need to analyze them. And to analyze them, put them under contract, and you need to make offers on them, right? That's the part I miss, obviously, as you can tell. You need to put offers on them. To know if you should put an offer on a property, you analyze it. And to know if you should analyze these deals, you have a buy box that these deals are coming into, and they make sense for you to go through that process. You have a buy box where leads are coming into those, the leads that fit in that buy box. You analyze those deals, you make offers, you put it under contract, you do your due diligence, you fund it, you close it, own and operate it, and then you get cash flow from those assets. That is the path to financial freedom through real estate. That is really the whole process. The problem is most of us, especially me, we're stuck in that very beginner phase where it's very easy to be paralyzed and just continue learning and doing the spreadsheet stuff, but not the actual offer making stuff. So with that being said, when I gave myself the ultimatum that I was going to either buy a property, the next one that made sense on my spreadsheet, right? I was going to at least make an offer, right? That was my goal. I was going to at least put in an offer for the next property that made sense on a spreadsheet. I couldn't guarantee the result, but I gave myself zero chance of success if I was not making an offer. If I was making an offer, it didn't guarantee I was going to get that property, but I increased my likelihood because I was making offers. If I did not make an offer, I had no chance of ever getting that property. So all I said was, I'm going to increase my likelihood for success by making offers on deals that make sense on a spreadsheet. If I did not do that, then I was going to stop pretending to be a real estate investor. I almost spent 18 to 24 months at this point, end of 2018 to March. So literally like 18 months, March of 2020, learning and doing real estate with no real results to show for it except knowledge. Well, knowledge wasn't going to make me financially free alone. I needed to own assets. So I did that. Next property that made sense on a spreadsheet, 2-unit property, used my VA loan. The closing was a little slow. We closed in May of 2020 because of COVID and all that stuff. Finance, everything was a little weird. Appraisals took longer, whatever. Closed on our first property. In that property, we lived in one unit, rented out the other. We were making cash flowing around $1,000 a month once we moved out. While we were living there, we were essentially living rent-free, which was freaking incredible. For someone who was paying $1,500 plus a month to live in a duplex where we were renting out, to then start living rent-free, and to know I was going to make money as soon as I moved out of that property, it was incredible. And 2 years later, that property was worth over twice what we bought it for, and we sold that thing tax-free. It was incredible. But that's 2 years down the line. So I did that. I knew I wanted to continue doing real estate. This was the proof of concept I needed. Wow. I did the thing. I went through the process. It was not that hard. I found a tenant. I rented it out all myself. It was not that hard. I even had my best friend, like my friends in Alaska, including my best friend, come over, help me renovate. Like we renovated a little bit to improve the property. And it was like, okay, this is it. This is what you need. Most people need this light bulb moment, this point of like this proof of concept for them. The first one was other people that I met doing the thing. That was my first proof of concept. Then it was my own proof of concept. Here's me doing the thing. I'm actually doing the thing. Here's the results. It's not as hard as I thought it would be, but it seemed so scary and daunting before I actually went through the process. So then I knew, okay, I wanted to keep doing this thing. My goal, 5 properties in 5 years. These are going to be small multifamilies that I'd continue to house hack. I will say I did that 3 years, but those that know me know I get a little antsy. My mentor says I need more patience sometimes to let the fruits of my labor like really allow them to shine and really allow them to grow rather than trying to just do more and more and more. But that's kind of the way I'm wired and operated. So at that time I knew, okay, I need to wait at least 1 year to do my next house hack. So I started learning other strategies. Number one being cash wholesaling. I started looking out of state, primarily in Alabama and Florida, to find properties that would make sense for an end buyer who was going to fix and flip or burr these properties. And what I would do is I would do something similar to bird dogging, which meant I started with a buyer first. I connected with buyers first in that market, just connected with them in Facebook groups in those areas and identified what types of deals do these guys want to buy? What are they looking for? So I knew if I had a property under contract that made sense, like that they told me that they wanted, the type that they wanted, then I knew I was going to be able to get those deals sold. And for me, I just wanted to guarantee results. I didn't want to waste effort without knowing that I had someone who's going to buy it. Because for wholesaling, most wholesalers out there, at least half, if not even more of their contracts that they put on the properties they put under contract don't ever sell. You don't make money unless you dispo those properties. So for me, I started with the buyers and then found deals that made sense for them. So I was still working direct to seller, but I started with buyers in mind first. So I kind of call it bird dogging, even though it was wholesaling at the same time. So did that, started making some pretty good results. Took time, took effort. Wholesaling has never been my thing. I've done dozens of wholesale deals, probably over 100 between cash and creative, although creative really wasn't my thing. And I'll explain why. It just doesn't make the most sense to wholesale creative deals. But like as a buyer person, I'd rather just buy those deals. But I started in end of 2020, 2021, cash wholesaling out of state. In May of 2021, I was able to use my VA loan again. And I literally, within a week of being able, not my VA loan, but another owner occupied loan. So I used an FHA loan because I could do another multifamily house hack. Literally like 12 months and 2 days after, basically, I closed on a 4-unit property in that market because I knew now. I knew, I've learned, I've done the thing. It's going to be easier to execute. There was no overthinking. The first property that made phenomenal sense, I was literally there as soon as it came on the market. I went there. I found out who the seller was. This is Alaska, like Fairbanks, Alaska. It wasn't 30,000 people. It's not so much that you can't figure out. They were tired landlords that just wanted to get out. And I said, hey, I'll make this a very easy process for you, but I want to buy this property. At that point, I didn't really know creative, so that wasn't even on my radar. But then I started that process, and this was already turnkey in essence. All I had to do was rent it out. Once the people moved out, increase the rents. If I wanted to, then I would furnish them and rent them as short-term and midterm, which I've done since all the tenants moved out over the last couple of years. So as tenants moved out, I would increase rent or furnish them and rent them out. I started with one, doing that, and then continued to do that with the whole property. Now it's primarily a mid to long-term furnished rental. It's pretty awesome. Best of both worlds, because Fairbanks is a very transient community. And at that point, I considered my first time paying for education. I paid for books and I paid for bigger pockets like the forum and the calculators and all that. But I paid for my first mentorship. And I remember talking to the mentor, and this was a seller financing course. All he taught was the seller financing, how to do seller financing, right? It was also how to find tired landlords with his very specific like direct mail strategy, but it was just seller financing. This was the one thing. And I told him, well, the price at that time was fairly low. It was like $3,000. For me, I said between my VA loan and then using my HELOC to buy the next property using my FHA loan, I basically bought 2 properties worth over $500,000 that generate me $3,500 a month in cash flow. And I basically put no money down for those deals. So how can I ever justify putting $3,000 to learn seller financing? And he said, I had the totally wrong mindset, because with that mindset, the $3,000 could have absolutely 0 results for me if I never took action on it. But if I was willing to take action, do the thing, even if I reduced my down payment, like for an investment property from 20, 25, 30% for an investment property, even if I reduced that from that amount to 15%, 10%, or I was able to get an interest rate a little bit lower, how quickly would I pay that money back? And that really opened my eyes for me was, okay, I'm thinking about the wrong way. It's not that there's ever a direct ROI when you're investing in education. There's no return on investment because most people won't do the thing they need to get the results that they need to, or they'll be distracted or half do it or whatever, and they won't get the results that they want. So there is no guarantee anytime you invest in education, you will get the results because it's dependent on you actually doing the thing. They have a process that works, at least the majority of people have a process that works that they're sharing with others, but you will never get the results unless you take action. That was a big thing for me. And I thought, not only could this potentially have massive benefits for me, what if it just condenses my time frame to the results that I want? What if instead of having to wait 1 year after 1 year after 1 year to do a house hack, what if I was able to do a few more deals through seller financing? And that's what I did. My wife and I hand wrote almost 500 letters. I connected with over 20 sellers that had small multifamily properties, right? Those are the 20-ish that reached out to me. They had a lot of equity. They tended to be what we call the tired landlord, and they did not live at the property anymore. So they were absentee in the sense of they did not live in that property. Not all of them lived out of state, but I went and met with every single person that was local that did not live at their small multifamily property. In the end, there was one duplex that I really loved from a seller, but he actually said he wanted to keep that, but he had 20 rental cabins that he was willing to sell creatively, in the sense that it was worth $800,000. He had a commercial loan for $400,000 there. He needed around $200,000 for a property he wanted to buy in Denver. That he wanted to buy his next house. He needed that much for the down payment or whatever, for whatever he needed the money for. But it was for his next house in Denver. He didn't explicitly say why he needed it for that property. He just said he needed it for that property in Denver. Got it. So there was $200,000 that he's willing to seller finance, but all I knew was seller financing, and to seller finance, you need to own a property outright. So then I, in a sense, created my own version of the Morby method. It's the same thing that my mentor Pace teaches, but I didn't know that at that point from Pace. I just knew I could take out a new loan. The seller can cover my down payment, my 25% down payment, right around that $200,000. He actually did like $220,000 or something like that, seller financing. And that covered all of my closing costs, my down payment. It was incredible. I got into this property within months of starting the seller financing thing because I took it seriously and took action immediately because I knew I wanted to expedite my journey. So I took action immediately, was able to get these 20 rental cabins that then added another $3,500 a month in cash flow. At this point, $1,000, $2,000, $3,500, I had $6,500 a month in cash flow coming in. I was essentially done for the rest of my life. I never had to work again. At that point, I told the military, thank you. I am so thankful for my service. I did everything that I wanted to. I had a huge impact. I was one of the youngest people to ever present and teach at the Army Public Health Conference. I changed the way that we analyze data, at least locally, which then moved up because a lot of cool things move up. I had a big impact in my local area, military-wide, and I was able to serve my country that I'm so thankful for being born in, that I feel very accomplished with my military career, even though it was only 4 years. And at this point, I got $6,500 a month coming in cash flow every month from real estate, which will only increase with time. So I said, okay, I'm not going to have my family have to move every couple of years. The risk of me potentially, being deployed and something going wrong or me getting injured or something, it was not worth it. And so I got out of the military. We moved back down to San Diego. We sold my first ever property because we over doubled the value. Of course, if I can take advantage of that and some of the tax benefits because we lived in it, I was going to do that. Got out of the military, and then we did our third house hack. We used that one VA loan that covered the first $160,000 mortgage. It was like a bank foreclosure. So that was my first property. We were able to take that and then buy $1.1 million 3-unit property instead. The cash flow was actually kind of the same. It was close to that $1,000 a month, but now we're talking about a much bigger property in a better area that appreciates much more. The debt pay down is much better. All those things were much better. The ownership benefits were better. Even though the cash flow was basically trading one for the other, right? And that's really when I started to understand I was no longer in Alaska, a high cash flow market. I was in the opposite, a high appreciation, little to no cash flow market. The only reason why I got cash flow in that 3-unit is because I furnished one of the units at that time. We lived in one, and another one we rented unfurnished. That's when I was able to make cash flow on that property. But that's when I started understanding real estate is not just cash flow, right? Cash flow makes you financially free, But then ownership of assets over long enough periods of time between appreciation, debt paydown, and tax benefits, all of that makes you massively wealthy, right? You give yourself 5, 10 years between forcing appreciation by renovating and improving properties and just market appreciation. Properties go up on average 5% in value. That in itself is going to make you wealthy if you're in the game long enough. So this was year 2, 3, I don't know, 2020 is end of 2022. And at that point, I got hit with an ad like a lot of people do. I got hit with an ad for Pace Morby, my mentor. My mentor now, who's played a massive role in my entire journey. But I got hit with an ad and I clicked the link. I said, what is sub 2? And I went to his YouTube and saw a video on the Morby method. The Morby method was the thing I did a year prior without really knowing what I was doing or how to structure it well. I made a lot of mistakes, but he was able to explain the concept very straightforward for someone who's already taken the action. It made a lot of sense, the things that he was saying. It could be overwhelming for some. It's a more complicated creative strategy than most, but it made a lot of sense. And he hit some of the key issues that I did wrong, but I got lucky. I built such a good relationship with the seller that even though the money went to his bank account, he then wired it back to me instead of it sitting in escrow, where that's when it would have paid out to me. Like it went to him. He could have just held it and I would have been screwed, but he gave it back to me. He just wired it to me. Thank you for being an awesome person. And thank you for me for building that, I guess, trust with him and building a good relationship. I clicked the thing. I went to sign up for sub 2. They were trying to tell me the price and all these things. I said, I don't actually care because I understand if I invest in my education, if I invest and I take action, I will either get better results or I'll do what I was going to do more quickly. And I would rather trade money to save time. That's honestly what it is. I'd rather trade money to save time because I can always make more money. I can never get back more time. So if this is the thing I want to learn or do, I was going to be able to fast track my path by paying for this education and then being part of this community. Little did I know how incredible the sub 2 community is. I think the majority of people watching this are part of it. Little did I know how incredible that freaking community is going to be and how much that was going to change my life more than anything else. Because now it wasn't just local real estate investors in Alaska. We're talking about people doing multiple deals a month, millions of dollars of deals, millions of dollars of wholesale deals, buying millions or tens of millions of dollars of real estate. Incredible. People I would have never had contact with otherwise, or would have been harder to build relationships with. At that point, I met Pace. He was in San Diego twice for Bigger Pockets conference, once and then another meetup. And he identified very quickly the problem with me and why I wanted to retire so early in my real estate business was because I created a job for myself that I did not enjoy. This job was, I was managing my own properties, especially out of state now, was a pain in the butt. When I was local, I was doing my own renovations. I was doing my bookkeeping, which meant I was not doing my bookkeeping because I hate bookkeeping. I was supposed to be doing my taxes. I did the bare minimum for taxes. I was doing all these various parts of my business that did not align with what I enjoyed doing, which what I enjoyed doing was talking to sellers and structuring deals and then figuring out how we're going to fund those deals. Once he had me just really reflect back and think, like, I was my own worst enemy in my ability to grow my business because I was so involved in the business. I was not thinking big picture, working on the business. And the best way to work on a real estate business is to help grow it. You grow it by getting more deals and by raising more money to fund those deals. You don't grow it by just managing your assets and all this stuff. You might have to do it initially, but the goal is to take your cash flow. At that point, I had $6,500 a month of cash flow, take a piece of that, and then just pay property management, pay all these people I said I was going to on my spreadsheet, but I just kept it for myself. I was focused on maximizing my cash flow per property as opposed to thinking about what if that time that I spent managing a property saved $500? What if I just went and bought another one that made me $1,000? What if I was able to raise more money so I could buy the next one using my own money? That was the big light bulb switch, that leverage piece of real estate investing, the kind of one of the fifth benefits of real estate, leverage. And I talked about that previously, how it's one of my favorite things of real estate, why I choose it over every other asset class because of leverage. And that's exactly what I did. I committed to becoming a master at creative financing, analyzing deals, consistently generating lead flow, raising money. And in 2023, we started with buying properties, primarily out of state, primarily in the Southeast. The majority were other people's deals. I was still wholesaling creative deals. We were trying to do our own direct acquisitions. We were, but then looking back, I realized by the end of that year, I was better off just buying other people's deals, wholesalers' deals, sometimes even helping them renegotiate, make them better deals, but buying their deals instead of me talking to sellers and agents, talking to 100 people to then potentially get 10 that are interested and then a handful that are motivated to then potentially get a deal. And it's like, shoot, that's not even the deal that I want. Why don't I just pick and choose deals from wholesalers instead? It's exactly what I started doing. And leveraging the more of my free time to building relationships with people who had capital, wanted to invest that capital to earn great returns, some that wanted ownership, and then some that wanted to learn my process as we were doing this together, right? Those are three different benefits I could provide to a capital partner because of obviously the deal provides the returns and the ownership, like the way I structure it. And then the learning can come from me as an additional benefit for them, for those that want to learn. Some people want to be passive. Some people want to learn and actually be able to do it themselves. That's another value I could provide to them, not just returns. That's basically what we did. We added 15 units that year in 2023, 15 properties in 2023, doing that exact model. 2024, double, triple, quadruple down into that and added 30 more properties, got my capital raising to a whole other level, started raising millions of dollars in 1 year, which that was not the case previously. Started using some of my excess funds to lend money out. And that's when I really started helping others more so, like structured with the Wealth to Real Estate School community, absolutely free community. Anyone can join. Whether you're watching this on Instagram, it's in my link tree. If you're watching this on YouTube, it's literally probably under this video. And at that point, we add another $10,000 a month in cash flow. So now I'm looking at close to $20,000 a month before the end of 2024. And that is really what my path has looked like. It's been doing things, learning and executing, paying for education, actually taking action on that education, and then learning how to leverage the things that I am best at in my business to scale my portfolio instead of working in my portfolio. One thing I forgot to mention is in 2023, I took some of that excess cash flow and hired an operations manager, and we've had her since then, end of 2023 till now. And she oversees asset management now, basically oversees our properties and some renovations, project management, oversees our property management, all these different things, and the VAs on our team, because I understood the goal is not to just make more cash flow like linearly. It's you're going to make money, you're going to invest it back in your business, and you're going to make more money because of that. You're going to invest back in your business, make more money because of that, right? And that is how you scale. At a certain point, majority of people could stop after my first 2-3 years, or maybe you do that fourth year where we added a bunch more units, over a dozen units, or that fourth year, I think I'm messing up my years, but that fourth year we added like 30 plus. Like you could literally stop at any point. But what I've done since then is continue to learn, continue to invest in my education, continue to improve, continue to share things. Since that, when I started my like coaching and all that was August of 2024. Since then, I've added over $5 more million of real estate. I've raised almost $2 million of capital, like deployed that into these deals, some of them transactional, but for the most part, deployed that or some of them to replace old PMLs. And I've learned how to use the fractional platform to raise larger amounts of capital from partners who have smaller amounts that they can contribute. And I've shared a lot of that stuff publicly. And this is the thing that my mentor says, I have a very fast feedback loop. I will learn, I will take action. It's not always perfect, but then I'll learn from that action. What did I do well? What went wrong and what should I improve? And then I'll continue improving it until it's this really solid process. And really the process I've been able to hone in on that makes the most sense of kind of everything I do is this super investor cheat code, which is buying creatively financed deals, ideally from wholesalers. So it's less work for you and honestly less money for the most part. Capital raising. So raising money to buy these deals. So my money is never a limiting factor in my ability to get a great deal. Just, is there a good deal or not? If it is, great. Let's fund those deals. And then co-living to maximize my returns. 2023 is when I started co-living because of a failed short-term rental. And I will tell that one in the future as a future video. But that was a failed short-term rental that was in Atlanta, tried co-living, realized, okay, it's not the perfect property for co-living, but it's positive now. And the rooms rented fast. That was a proof of concept I needed to double down, triple down into this strategy. In between creative, capital raising, and co-living, I've been able to massively scale my portfolio, get more deals funded because the returns are better in co-living, raise more capital, and get much better financial freedom, cash flow, right? As well as wealth generation through the ownership benefits. And we also get to help people, which is incredible. So with that being said, I hope this was a much more detailed breakdown in my journey. I could even go and break down 2023 to 2025 in more detail if you guys want me to. Just let me know. Reach out to me and let me know if that is something that you want, or drop a comment in one of these videos. Let me know. I can go even more detailed, but it really has been since 2023 till now. Buy deals from wholesalers that are creatively financed for the most part, raise capital to fund all those deals, and co-living, some short-term rentals, some long-term rentals, but co-living has been the number one strategy that I've implemented in my business for the management of our properties. It just makes the most sense. I have like 10 videos on this topic, why it's the best. So hopefully that was helpful. Davey has a very transparent insight into my journey. I don't know why most people are not willing to, but I want to help you guys out. And that includes being transparent with my journey.